slammed in the after hours, down as much as 8%. This is mostly on weak guidance, but the company did beat on the top and bottom lines. Let me give you those first. Adjusted EPS coming in at 11 cents. That is 3 cents higher than the street was expecting. Revenue too exceeding forecast, 489 million versus 478 million expected. Here are the soft spots. Gross payments volume. This is a critical metric for investors. It shows the amount of payments processed on the platform, coming in slightly lower than expected this quarter, $22.6 billion versus $22.8 billion expected. So a small miss here, but this is a very important metric. Q2 guidance, also a sore spot, both EPS and revenue looking light. The company forecasting adjusted EPS between 14 and 16 cents and revenue between $545 and $555 million. Again, these are both lower than the street was anticipating. For the first time, I do want to mention, though, that Square is breaking out Cash App volume growth. This is its P2P Venmo competitor, where a lot of analysts see the growth coming from. They're not giving us an absolute number, but it says that Cash App GPV, payments processed, grew nearly 150% year over year. The losses are narrowing somewhat in the after hours, down 6% after being down more than that, more than 8% previously. So, guys, investors clearly digesting through some of the good and bad of this mixed earnings report.
Hey, Deirdre, do they break out some of the other businesses, like my favorite overpriced restaurant delivery service, Caviar?
They do have subscription and services revenue, so that is actually above expectations, coming in at $219 million. That's what the restaurant revenue is from. And this has been a very strong point for the company. Remember, the company started out doing the dongles, which is hardware. That now makes up a very small part of revenue as they grow the subscription and services transactions. So this is the biggest portion of its revenue. That did come in a little bit light this quarter.